Hi there, this is Bill with Smart Trades. It's Thursday evening on December 17th, and I wanted to take a quick look at the S&P and a couple other markets. First and foremost, as far as I'm concerned, the S&P still appears to be in a contraction, and something that's very interesting about that contraction to this point is that you have a series of ABCs of smaller and smaller degree here, forming as we contract even within the contraction on the S&P, if you will. So we have an ABC down, again another one, and yet a third, and we're holding just above the uptrend line. The outcome that I prefer here is that we've got one more rally to go up towards the 1150, 1160 area, which would coincide with the top of the wedge somewhere around the first of the year, perhaps just after the first of the year. But we'll see how that pans out. And let's take a look here next at the cash and shift over to a daily chart. And as you can see, here's our short-term contraction for about a month. Very tight range on a closing basis of about 30 points, or about 2.5% or so. And so far, again, we're holding. One caution, because narrow ranges tend to produce very large moves when they're finally broken, I would be alert to the possibility it's going to break out on the downside. I don't favor that, but if it does, it's more than likely going to produce a pretty fast and furious move. So I would be aware of that, and let's watch for it if it does get below about 1080 or so. And here's a review of recent narrow ranges, and as you can see, for the most part, they did produce quick moves immediately and sometimes sustain longer moves. And one thing you can count on, if the market is contracting, when it breaks out, you're probably going to see a range expansion. The direction is a little less predictable, but the probability of a range expansion following a range contraction is very high, so let's be alert for that. Next, let's take a quick look at crude oil. And here is we've got that wedge going up in the crude, and apparently it's been broken. So I would be alert here to the possibility that if we do break down out of this short-term little rally, that we're going to see some downside. It's worth keeping an eye on here. I'd look to sell it on a stop just below this pattern, perhaps. And let's take a look at the dollar index as well. Now, the dollar index probably is better looked at on a 240-minute chart. And just a quick note, here's some range contractions just on the hourly, and as you can see, those contractions produce sharp moves in the direction of the trend. And make a long story short, that's basically what we're seeing the potential for right now in the S&P as well. Let me look at that 240-minute for you. And here we have the reason that I originally thought that the dollar had not bottomed is because the pattern to the low in November was an ABC pattern, and even in retrospect it still appears to be an ABC pattern to that low. Moreover, if you take 1.62 times this rally here, which I'm labeling as A, call this B, 162% of A comes in very close to where we are right now on the dollar. So possibility exists that this entire rally in the dollar is a C wave, and that new lows could be happening. If that is the case, we want to see the dollar roll over pretty quick here and start to move to the downside sharply. So far, all of the declines have been corrective, producing narrow ranges and then breakouts to the upside. If again we see another corrective style decline, and if it holds, say, 76 or so, I would shift and say that it's more than likely that the dollar index has bottomed. I certainly would be alert for that. But again, the possibility that this whole pattern is an ABC is something to be cognizant of. And last but not least, let's take a look at gold. Now gold, this decline so far looks more impulsive than it does corrective, to be sure. So although I was looking for a new high in gold, and let's review that count here. I was originally looking at this as a 3-4, that this is a small degree of fourth wave and that we were going to go back up. I still think that's certainly a possibility. However, the impulsiveness of the decline sets the possible stage that the top is in gold, and this was just an extended fifth wave rally. Now, the key thing to remember here, and let me give you a little bit more of the overview, is that regardless of how we count this rally, the C wave rally, and whether it's done or not, to keep in mind that this entire rally from the late 2008 lows is corrective. It clearly is corrective. You've got A up, you've got a triangle B, and again, this is possibly 5 done in C. I prefer that we go back up and have an A equals C and have nice subdivisions to form a more classical fifth wave, 5 waves up to around the 1250 area. But at this point, certainly have to look at the possibility the top is in gold. That's about it for now. Thank you so much for watching. Bye-bye.